slides we could hand out as well. So again,
I think.
Yeah. Oh, okay, very good. Thank you so much.
Okay.
Mr. Chairman, committee members, thank you so much for inviting us here today. We really appreciate it.
Being here.
Thank you. So I'm Chris Larson. I'm the CEO and co-founder of Ripple Labs. Ripple Labs is a software company based in San Francisco. We're at just over 100 employees today. About 2/3 of those are engineers. We're trying to bring together a combination of technologists with deep experience in cryptography, with financial experts that understand the basic plumbing of our global financial system, as well as regulators. We just added Gene Sperling recently to our board, used to be the chief economics advisor under both Presidents Clinton and Obama. And so what we see that's important about this technology, this distributed ledger technology, isn't so much that there's a creation of a new currency for the world. We actually don't think the world needs a new currency, has plenty of currencies. We think the big problem is moving those currencies around efficiently, either globally or even domestically. So if you look at the way money moves today, we have really a series of closed-loop systems. The U.S. system is actually not connected to the European system or Australia's system or China's system. And the only way that those value or payment systems talk to each other is through fairly antiquated technology and processes like correspondent banking, for example. So the problem with that is, I can literally send a package to Europe faster than I can send money there. So our current value exchange system is very slow, 2+ days minimum. It's actually very expensive for banks in terms of capital they have to put up and fees they have to pay the correspondent banks. There's actually quite a bit of risk in the middle. Payments fail all the time while being transferred. And there's sort of a key lack of competition for foreign exchange and sort of liquidity in our global payment systems. So what we see these technologies for being important today is addressing that need of banks to move value internationally and domestically. So we actually don't think today there's a particularly strong consumer or merchant value proposition. We think there absolutely will be, but we think right now these technologies can actually serve banks as sort of a key missing settlement infrastructure at the bottom of the payment stack. So leaving alone the application layer that banks use, the custodian of asset layer that banks provide, and even the rule setting that NACHA and SEPA in Europe provide today. This would really just address allowing value to settle in seconds instead of days, without the need of banks using an intermediary like a correspondent bank. Without the need of banks using an intermediary like a correspondent bank, banks could settle directly without risk of failure in the middle, and providing sort of new fundamental levels of competition for foreign exchange and liquidity. And kind of stepping way back, we agree that this is the beginning of an internet of value. That is now possible. It wasn't possible before Bitcoin. Bitcoin showed it was possible to do this. Ripple's taking that using a different technology based on the same principles. But the key thing is we think just like the early days of the internet of knowledge, going back 20 years ago, that internet would not have value unless you got the key custodians of knowledge on board, the universities, the research facilities, think ARPANET, Stanford. We think we're in that same period with the internet of value, that before these technologies have key utility, we have to get the custodians of value on board first. And those are the banks, financial institutions, market makers. Then I think we're set up where these things can have tremendous value across the board. And so again, the value these things bring are speed of payments, seconds from days, the ability to correspond directly, bank to bank, with much less counterparty risk in process, and with fundamentally more competition for foreign exchange and liquidity for those institutions, which will trickle down to the businesses and consumers that use those institutions. And I'm happy to answer any other questions about our technology or the company. And again, thank you so much for allowing us to be here.
Appreciate the opportunity to meet with you today. I commend your leadership in investigating virtual currencies and other emerging technologies. I'm pleased to offer an overview of Ripple and address any questions you may have. Ripple Labs is based in San Francisco and employs a team of 95 men and women with experience in government and regulation, finance and technology, Their previous experience includes Federal Reserve, U.S. Securities and Exchange Commission, the NSA, Goldman Sachs, Deloitte, Apple, and Google. Our goal is to create faster, safer, and more efficient payment systems domestically and across international borders. In my view, a large portion of today's inefficiencies in payments stem from antiquated infrastructure. In many countries, the technology underpinning payments was last updated in the 1970s and was not designed with interoperability in mind. Because systems are not compatible, banks have to rely on a patchwork of intermediaries to move funds.
Competition because it requires capital to get it there. Our view in the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack, an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin. Where Bitcoin today, on a per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote-unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow. And as Norman was describing, if you're a large corporation moving $100 million, that's one thing. If you're a freelancer working in the Philippines doing design work for a company in London and you want to get paid $30 or 30 pesos, Philippine pesos, that's not a transaction that can easily be enabled. And in fact, for the companies that enable that, they require the freelancer to set up an account and they don't actually pay it out until there's roughly 1,000 USD sitting in that account, and then they would pay it out.
Also, I think there have been a number of different people we've hired over a period of time. One of the former board members of SWIFT, a gentleman, Marcus Treacher, joined our team to run all of customer success. And, this was, a former board member from SWIFT coming over and saying, hey, we don't think SWIFT's going to be necessarily a solution to really unlocking this Internet of Value. These are, marks along the journey.
Once upon a time, the world of interbank payments was dominated by SWIFT, the global messaging network that connects banks and financial institutions. However, a new technology emerged, Ripple, and slowly but surely, it began to disrupt the industry. Ripple's blockchain-based platform allowed for near-instant and low-cost cross-border payments without the need for intermediaries. It also provided enhanced security and transparency, making it an attractive option for banks looking to improve their payment systems. As more and more banks began to adopt Ripple, its popularity grew, and it soon replaced SWIFT as the predominant interbank payment network. The benefits of Ripple's platform were simply too great to ignore. As Ripple became more widely adopted, the use of its digital asset XRP in the company's on-demand liquidity, ODL product, began to increase. ODL enables banks and financial institutions to use XRP as a bridge currency to facilitate cross-border payments, reducing the cost and time involved in such transactions. With banks using XRP and ODL, demand for the cryptocurrency increased, driving up its price. Institutions began buying XRP in large quantities to ensure they had enough liquidity to facilitate their payments. Investors also took notice, recognizing the potential of Ripple's technology to revolutionize the financial industry. They began buying up XRP in large volumes, causing its price to skyrocket even further. As Ripple continued to gain traction, it became clear that the financial industry would never be the same. The traditional methods of cross-border payments were being replaced by a faster, more efficient, and more secure system. In the end, Ripple's success led to a surge in the price of XRP, making it one of the most valuable cryptocurrencies on the market. The world of finance had been forever changed, thanks to the innovation of Ripple and the adoption of XRP in its ODL product.